And joining us now to share his commentary on the day's market performance is Sam Houlie from Differential Capital. Thank you so much for your time, Sam. Let's actually start off there in the geopolitical arena. The G7 meeting is taking place in Canada, of course, concluding that meeting today. And this is amid escalating tension in the Middle East, a hope for de-escalation between Russia and Ukraine, and of course, amid Trump's uncertain tariff policy. Are there any expectations for the leaders, as they are trying to weave through these issues?
Well, thank you very much. It's great being here. We watch these G7 meetings and all of these meetings when all the leaders come together with great anticipation as a rule. The recent one seems a bit more relaxed than other times. I mean, notwithstanding the geopolitical background.
Yeah.
And certainly the way we've seen it, it appears as though there is a bit of a stalemate in the sense that there's nothing dramatic that's coming out of it. And so far, the first day was fine. We expect the second day to be much more the same. And no, so we don't see any news. And we always infer the outcomes from the way markets are reacting. And we think if you look at across markets and bond markets, currency markets, even commodity markets, there seems to be a relative calm. So we don't think anything dramatic is coming out of it.
And this is interesting because, I mean, the current thing that's taking place right now is the escalation in tensions between Israel and Iran. And, I mean, how are you weighing this impact on markets? You talk about a muted market reaction. Are markets just shrugging this off as, I guess, business as usual in the Middle East?
Well, yes and no. So if you look at oil markets, certainly the oil price has gone up and the energy market has reacted. We've seen a pickup in volatility. So in this sense, the market is taking it seriously, but not as serious as we've had in other previous situations of this like. I mean, we've had these type of things every 1 or 2 years. You have this type of thing, and we certainly had it in late 2023, as you can recall. So our feeling is at the same time the move is not as dramatic as before, which leads us to the conclusion that it is muted, unless there is a super escalation. And so far it appears in terms of Israel and Iran, there hasn't been enough of an escalation for markets, to react significantly in a negative way. So for now, we're sitting back and we're waiting.
Yeah. All right. Well, while we are waiting, we are sifting through company news that are coming out of the JSE. Of course, the results trickling in. And today, particularly from the property sector, Villiage released its annual results. Of course, the geographically diversified REIT, talking about a transformative year. And of course, we saw solid growth from the top to the bottom line. And also saying that they are rewarding their shareholders with an increase of 6% there in that dividend. How did you digest those results?
Yes, we looked at these results, and we've been covering this particular sector, the listed property sector, for a long time. So contrasting results, in the case of storage, it is really a very, very, very impressive decade. I mean, I remember when storage came to the market, and if you look back and you see what the management team have achieved, it is phenomenal. So it is one of the stocks that, in fact, has superseded expectations in that sector over a very difficult decade.
Yeah.
So over the past 10 years, you've had a lot of ups and downs for the listed property sector. And we think storage will continue to do that. The stock is priced for that. So investors might make reasonable returns, but they're not going to make exceptional returns in our view.
Okay.
And they have diversified slightly to the UK. So in the case of Villiage, it is transformative. And there we'd rather take a wait and see approach. I mean, the idea of going and shifting your business model a little bit, to Spain and Portugal, time will tell. But, I always think that that's very difficult. And then South African investors are investing in rands and trying to generate returns in rands. And lately we've seen the rand, in fact, strengthen and not weaken. So, it's not immediately clear to me that will be a super return in terms of Villiage, but a really good result for them.
And this is quite interesting because, I mean, they're both geographically diversified with SA and then other regions in Europe. And with Vukile, you typically see Spain doing growing at a more accelerated pace than the South Africa portfolio. But actually in storage, you're seeing the South African portfolio growing much more than the UK operations. And I'm wondering if really this emphasizes just the defensive nature of what storage invests in.
Yeah, storage is an interesting model, so they're inherent sort of what we call secular tailwinds for an increasing move towards storing things, and storage has in effect captured market share in South Africa and continue to do that. That means that they benefit from all of those tailwinds as more and more people use storage facilities, and a really very good model in terms of occupancy and how they charge. So they're very hands-on. So we think in South Africa, they have a very dominant position. In the UK, there's greater competition, and whenever you have greater competition, the returns available to all the players is not as attractive. So, but, great execution from their management team, yes.
All right. Well, here's a deal that has been concluded, and that's between 91 and Sunlam Investments. Of course, we've known about this deal, but now seeming that all the conditions have been satisfied. I did see that share on 91 climbing about 3%. That also just drumming in the fact of how valuable this deal could be for 91?
Yes, I think that for the longest time, post the announcement of the deal, and both of these stocks are fairly big in South Africa. Sunlam as a life insurer with the management team, and then 91. So now that the regulatory headwinds, I think, have been navigated, I think it's now set in terms of proving the integration. I know that in the background, they've been working on it.
Yeah.
And, 91 is in fact my alma mater, so I worked there for a long time, and I have to say that particular investment team, leadership team, very, very experienced, and I expect them to really benefit from this deal. It's a phenomenal deal in terms of gathering assets, and it comes down to the execution and how you combine the teams and you generate the returns on existing assets, but ultimately growing certainly in that private credit space, which I think will be a very big growth area for 91 post this deal. So I think that all else being equal, it is in fact a phenomenal deal for both parties because Sunlam retains a stake in 91. So I think it might be a case of a classic win-win. It comes down to execution, but 91 certainly has a phenomenal leadership team there. The best, I think, in terms of investment management, I think it's the greatest success story in South Africa in terms of building an investment business of scale on globally. So I expect them to continue. I think it's phenomenal.
Well, Sam, before we get to your specific stock pick, let's take a look at the stock picks that have found favor with your industry peers.
So I'm looking at Booz Allen Holdings, which is it's a 100-year-old plus consulting business in the US. They consult basically mainly technology consulting and contracting. A lot of that is to the US government, a lot of it is in defense, a lot of it's AI and cybersecurity related. So I think they're very well positioned for those growth areas. Having said that, the stock's been punished quite hard in the face of Doge and government spending cuts. And I think that's where the opportunity has come in, because I don't think Doge has been that much of a success. There might be some cutbacks in the US. I think they're not going to be as big as people think. The demand for AI, technology consulting is going to only get bigger from here. And so I think you're getting a very cheap entry point into what has a long history of being a very good business.
I'm actually going with gold as my stock pick for today.
Okay.
And again, we were talking earlier about the requirement to, just diversify a portfolio properly. I mean, obviously this is a stock picking show, but there are plenty of gold miners that you can go and access as well. So for us, obviously what's happened overnight, it's just a reminder of the importance of also having a properly balanced portfolio and kind of selecting your asset classes correctly. And I think having a little bit of gold in a portfolio works well. Obviously you can buy it through the JSE Central Order Book, and that's actually what made me think about it, because we emptied the JSE Central Order Book this morning in terms of Kruger rands. So you can actually go and buy the physical. And of course, you've got all the ETFs and all of that. But if you are concerned and you're looking for a good hedge, we've seen gold now becoming, on central bank balance sheets, it's now displaced the euro. So it's dollar, now gold is the biggest holdings. And as we see potentially a de-dollarization and friction continuing in the US, I think there is still a little bit of a tailwind here. If you're looking for a company specifically, maybe having a look at something like Harmony, they have recently bought into copper assets as well. But if you look at our gold mining sector, ASICs of around $1,500 an ounce. We've got a gold price at $3,400 an ounce. That's an enormous amount of cash that these miners are generating at the moment. And if the gold price can maintain where it is, and we see these tensions continuing, there should be further upside.
Well, Sam, let's actually start off there with gold, because, gold is one that people have been looking at closely, wondering when the gains will stop. And now, at least for the past 2 weeks, people have been saying, wait, we are still seeing more upside in gold. Is this one that you would be investing in at this point?
Yes, we agree with that thesis on gold. Certainly, right now there's a safe haven status appeal right now, which is driving it in the short term. But in the long run, there's been central bank buying, and structurally, gold is in a bull market. So firstly, in terms of the dollar gold price, we believe it will continue to go up. And then flowing from that, gold-related securities, whether it be South African mining stocks or global mining stocks, we can find so many, and we are invested on behalf of our clients in gold mining shares, where the underlying profitability is not really being reflected in the share prices. So even if the gold price were to slow down, those gold-related securities will in fact do quite well. So yes, we are constructive on gold and gold-related shares.
And I actually saw an article on CNBC International this morning saying that gold is actually outperforming in terms of its safe haven feature, even outperforming US Treasuries and the Swiss franc. So really, really quite interesting to see that trajectory in gold. Well, let's talk about, is it Boers? I want to say booze, but it doesn't have the E, and we're out of the long weekend. So let's not say it's booze. Boers Allen Hamilton, a management consulting company. Never heard of it, but Grant seeming quite bullish on it, considering tech consulting that's going to be needed in this AI boom. Your thoughts there?
Yes, it's not. So Booz Allen Hamilton, it's not a stock that's come up on our radar screens or our data screens. So we, that's the first step before we start looking at a stock. I happen to know the underlying business well over the years.
Okay.
And I would say that it's not an idea that we would be buying right now, and it's a simple reason in that the business is currently pivoting from government, where it was their main customer, where the Trump administration is clear in terms of reducing government expenditure and trying to be more efficient, and they're trying to pivot towards civil. And I think that whenever a business pivots, it's a very difficult moment. And as investors, I'd rather know that management has pulled it off and that they have some tailwinds. So there's some headwinds there. I can understand why someone would want to buy it if they take a long-term view. But at Differential Capital, this is not an idea that we.
Okay, that's a very, very interesting point there that you make, that in that transition, things may be a little bit shaky, but once they execute, then maybe this is something that one can look at. Well, what else are you looking at this point, Sam, your stock pick?
Yes, so I think that in the context of what's happened in the last while, we've seen a lot of South African-related shares sold off. And my stock pick is Telkom, which I think is probably one of the most South African telecommunications businesses. And before I go into Telkom specifically, there is a trend that, given that we in South Africa, a lot of investors have become, I think, complacent, that they think that there aren't opportunities available. But a lot of South African businesses, management teams have the ability to turn things around and generate cash. And Telkom is one of those. So the few points that I want listeners to think about in terms of Telkom is, their recent result confirmed the data that we've seen for the last 2 years, that there's strong growth in free cash flow, that the mobile business is growing incredibly fast. So all the data around mobile services, mobile data, mobile revenue is growing well, and there's margin expansion, and all of their legacy business continue to do well. So they generated massive amounts of free cash flow and have declared very high dividends, including special dividends. And so there's a high payout ratio. So if you think about Telkom as an idea, it's an idea where they have high free cash flow, and they can pay ever-increasing dividends from that growth. And you're only paying 7 or 6 times free cash flow for that business currently at a 22 billion market cap. So I think that many South African investors are ignoring the trend in telecom. And if it continues, this business can make earnings of 6 Rand a share quite easily.
Yeah.
So within the next 12 to 18 months, investors will have to revise their expectations upwards. So it's one of those ideas that's done well for us for 2 years.
Yeah.
But the data is confirming, so we think it can continue to do well. So keep your eye on telecom.
All right. Well, thank you so much. We do have to wrap up the conversation there, Sam, but I really appreciate your fantastic insights. Definitely made me more clever today. That was Sam Houlie from Differential Capital.